Okay, welcome everyone. Good morning. We'll introduce ourselves first and then we'll start our session. A couple of you already know me. My name is Anjum Satar. I'm working with the university last 10 years now. And I'm also teaching other places such as University of Bradford. I'll try my best, meet your expectation. Background is ACCA and I'm teaching various sort of subject, finance, and I'm also teaching business management few modules as well and I'll try my best to meet your expectation. Please, if you have any question during our delivery or after, please drop me email anjum@ukversity.co.uk. I'll try my best get back to you as soon as possible. Okay. So please, if you don't mind to quick introduce me so I can include the example from your background from the industry. If you don't mind to just your good name, what you do, what you done, please, if possible. Keep in mind GDPR. If you don't want to share, absolutely fine. Yes. Okay. Yes, please.
So who wants to go first? Is it me? Right. So I'm Sandra. I work as assistant accountant. So I studied finance in university. I studied with SEMA before, and I went to study with IFA now. Just need to deepen up a little bit of knowledge, and I'm starting new work part-time for a construction company as their main accountant in 2 months. So yeah, basically I just need to kind of refresh my understanding for the accounting, and that's it really. Nothing too big, too glamorous. That's all really.
Great. Many thanks. Great. Nice to hear is a SEMA and then of course, the working and experience in accounts. Great. Please
Yeah.
carry on sharing, and we can learn collectively. One of the great scholars said, Henry Ford, coming together is the beginning, keeping together is the progress, and working together is the success. So we work as a team, we'll share, because maybe you have more experience in certain field because, of course, you're working in accounts and I'm more in teaching side.
Yeah.
Okay. Great. Thank you. Thanks for sharing. Yes, please. Hello. I think. Yes, please. Can you little bit introduce yourself, please? Maybe he's away slightly. Okay, no problem. We'll start then and we'll. Okay, so have you completed any modules yet, of IFA? Have you submitted assignment? Have you done?
Me personally?
Yes, please, if you don't.
No, so this one's going to be the first one now.
Okay, it's your first one. Okay, brilliant.
Yeah. So yeah, I mean, I registered with you guys a few months ago, but I never had a chance to start the actual course because of my work commitments. But now I have some free time, so I'm going. Yeah, this is kind of tackling my first unit now, and I only got like 2 to go, and this is 3 to go actually, and this is the first one.
Great. Yes, that's welcome. Thanks for joining us, and we'll try our best. So let's please, Okay, so we kept time 10:30. Is there any chance next week and Saturday and Sunday, can we do the session 2:30?
I'm fine with it. I'm off on the weekends, the weekends that are following. So for me, it's fine. I don't know about the other guys.
Okay, no problem. I'll drop emails to everyone, or either we can start 9 to 10 as suits you, because I have a little commitment in between 2 hours. So just want to make sure,
Yeah, for me, anytime is fine. I don't know about the other guys, so probably.
Yes, so he's okay. Clinic is okay, no problem. So that's fine. I'll drop email and I'll change. So which time is best for you? Is it 9 or 2:30? Because don't want to, because sometime if you're going out and for shopping and other purposes.
For me, afternoon is a little better. I have a small kid at
After,
home.
afternoon. So we can say, we can do maybe 12:30 till 1:30 then.
Yeah,
Yes. So you
that's
late
fine.
Your late afternoon will be free then, of course. You know.
Yeah, sure.
Oh, great.
No problem.
Thank you. I'll drop you email, everyone, before if we change.
Yeah.
Uh,
Great.
okay, so do you have a Moodle access, please, everyone?
Yeah.
Okay, brilliant. Okay, we'll start with the unit specification, what we're supposed to learn. Always good to. Okay, so everything is on Moodle. The things which we are learning and which we'll go through. So please, always good to be, if you don't mind, to set up your account on Open Tuition. I'm not sure ever you heard about or not. So this is available for public. Anyone can really. Okay, so of course you done some, the CMAs and all others. Everything is there. It's absolutely free. Which is set by London School of Business and Finance, but we just matter of because it's a free resources. Okay, so let's please, what you can do, if you want to set up account, you can, if you can look around under ACCA F8. Yes, so because it's relevant, I'll send you the books, Kaplan and all others publisher. Those will help you to prepare your own, prepare your own assignment and the coursework, which is because assessment criteria is it's only the coursework you have to submit one assignment. Okay, so we have learning outcome. So each lesson we'll go through one learning outcome, which is we call LO. So this lesson will go through LO1, which is mean learning outcome 1, because most of you already working in accounts and you have a basic understanding. Maybe you have more understanding in specific areas. So please, so we'll try our best, to cover each lesson one learning outcome. But if you need extra help, or you think, you need extra support, because sometimes it's difficult in our hour to go through every bit and pieces, what we can do, we can arrange one-to-one, and we have some recorded sessions available as well. So, and we'll send you recording as well. Due to any reason, if you can't attend, so please, just follow by recording. Okay, so understand the nature and importance of internal control. That will be our lesson 2. Lesson 3 will be consist of greater evidence of completing an assurance engagement, which we'll go through. And lesson 4 will be understand the needs for professional ethics. So we'll go through 5 professional code of ethics, uh, which is very important if you're a member of IFA or any other awarding body. So we have to follow the professional code of ethics. So please, when we'll deliver, we have indicative content, what we're supposed to be learned. So today lesson key indicative content will be define, the concept of assurance, what is meant by report, internal, external. We'll go through principles, and we'll discuss engagement, acquisition, risk assessment, scope. Yes, maybe some each elements or each bullet point, but it will, our discussion will cover almost everything. If anything left, so please you can ask and we can arrange as well, and we can, and each lesson will carry on recapping, because sometime is a link with LO1 with LO4 or LO3, so that will cover as well. Okay, so this way our delivery plan will be, and we'll carry on delivering. So please, M is represent the merit. If always low M is a crime, fail in life, no crime. So we have to work towards distinction criteria. Yes, doesn't matter, we end up wherever. So please, always look around higher grade. So you can get pass, merit, and distinction. So you have to really more compare and contrast and evaluate and adding real example. So you can hit, this distinction criteria, which is D. Yeah? Okay, any question until now, please?
Not really. Not from my side, at least.
Okay, so please, if anyone don't have access, please just drop emails to admin@ukversity.co.uk. They will get back to you and will sort out your, login details.
Okay.
Next we'll look today. Please, on Moodle, you have, we have assignment brief, we have all relevant resources, all books, journal articles, and today lesson will go through LO1. Okay, welcome. Understand the concept of assurance. Basically, is F8 in ACCA we call audit assurance, and IFA's qualification which we are doing and approved, so which is called assurance. Huh? So it's not a big difference. I'll give you the Kaplan books as well, F8 ones, which you can use for the background reading. And if you want to set up account on Open Tuition, you can as well, which is absolutely free. And you of course our lesson will be recorded as well. That's also help you. The aim of this unit to provide learner and understanding the concept of assurance and consider the responsibility of different stakeholders, how we'll make sure, because at the moment in audit after Enron and creative accounting is very dominant in industries, and like recently Carillion construction company 75 million sort of pension shortfalls and various others, the thing. A lot of new standards being set up to address these issues, but still these things happening. So when we are saying assurance, we give assurance always. We'll try our best in terms of the legal and ethical, true and fair. What is your best, you can, because sometimes it's difficult. Like accountant can request from the client to get the bank statement and then prepare accounts according to whatever evidence we have. If someone is hiding evidence, it's not our fault. We're not being provided, so we can only ask the question. Yes, so that's we can give assurance based on whatever the data, the information being provided, whatever evidence we have. So always we need to look around those. So always good practice, please, if we start any activities, whatever you're doing, or you're delivering training at your own places, so please, it's always good to be little draw a line and always reflect what the people know or current your knowledge about assurance. Have you ever worked in audit? You deal with the compliance. Of course, whichever level we work, whichever capacity we work, of course, we'll carry on dealing and comply with the compliance side. So please, I'm not asking you where you up to, but you can reflect yourself, huh? And we'll carry on reflecting, and at the end we can see where we will be and where we're heading towards, huh? And we'll carry on improving and linking to own reflection. Wherever you work, always look what is happening in your own organization. Can we apply these concept assurance in our own organization or in our own capacity, in our own role, huh? So that will be indicative content, as earlier I mentioned when I explained your assignment unit specification. Okay, so what is the assurance? Assurance engagement, in which the practitioner, which is accountant, express or the conclusion designed to enhance the degree of confidence the intended user. So in accounts, we look around, intended user can be many. So we can look around various stakeholders, HMRC, yes, very keen to be reflect the true accounting and look around and paying the right amount of taxes. And various other stakeholders, like the shareholders really want, we are paying them reasonable dividend. Yes, and the company performance and the shareholder wealth maximization is a key purpose of all this assurance, whatever we are doing it. Responsible party about the outcome, evaluation, measurement of the subject matters. So in the case of an audit, the definition work in practice like this: practitioner, auditors, intended user, owner, stakeholder, responsible parties, managers, subject matters on the opinion is a given on the financial statement, and criteria, accounting standard and legal requirement. So like we prepare the account under IS1, International Accounting Standard 1, if we are following our any other local standard like GAP or SAP or whatever, whichever local standard you follow. So reasonable assurance is a high level of assurance, but not absolute insurance. We can't say 100% is. We can say is according to our best knowledge, according to the in the law and the evidence we have, we can give the assurance. Yes, but we can't give the absolute assurance. Any question, please? If you have, you can carry on asking. Okay, limited assurance is a lower level of insurance than the reasonable assurance, which is stated negatively. Yes, maybe not 100%, absolute, but some. So based on evidence, but we're not really looking in term of recent, maybe some changes happen and those. Okay, and auditors can never give absolute assurance because inherently limitation of audit. Because there always risk involved. Risk in mean probability of happening something. Inherent limitation, we can look around the subjective judgment by directors, and director may not give all the information to the auditor because we have an internal audit, we have external audit, we have a secretary audit, which is a requirement by the government, and those we need to be, and we can possible that the fraud has been concealed sometime. Yeah, is intentionally, if things we are doing that's come under fraud. If mistakes happen, no problem, of course it can, but that's here ethics come as well. Like some people, they're not submitting every quarter return their VAT correct amount, and the next quarter they are adjusting, or is a human error, and that's of course if they are doing intentionally, it's come under fraud. Like Tesco 220 million turnover, but actually turnover was 180 million. So sampling, so evidence is persuasive and not conclusive, so which we need to be look around those. Okay, what is assurance? We earlier said an engagement in with the practitioner express the conclusion design to enhance the degree of confidence of the various stakeholders and other responsible party. So as a editor, as working in internal audit department with the audit team. So you have to look around reasonable assurance. Sometimes we give the limited assurance, statutory audit, which is compulsory by law. Like all PLC company, they must need to do audited. Their audited account need to be submitted to the company house, and we have a requirement of stock exchange as well, which we can look around. Free from the material misstatement. Material misstatements is maybe materiality concept. We need to be look around. Yes, we'll try our best. The rules and regulation are followed, and that's why we have a new IFRS 16, which is about International Financial Reporting 16, which is about leases. And because a lot of leases and agreement which not used to be stated in the financial statement, because that's why the financial statement not used to be provide the true and fair information, because there was either is operating lease or finance lease. Finance lease used to show on the financial position, but not the operating lease. So that's the biggest issue was. That's why the new standard carry on to reduce the risk of incorrect information and can we give the true and fair. Okay, the element of insurance, 5 elements which we can look around. 3 parties normally is involved. We can look around the practitioner, the reviewer of information, intended user, and responsible parties. So because normally you keep in mind the agency theory, agent, those are working on the behalf of actually owner of the business is the shareholders. All other are agent, like public limited company director are the agent of the shareholders. They have to work in the best interest of and always in the public interest as well. So we have to look around the reliability, accuracy of the matters, and appropriate evidence. Yes. So that's the really we need to. Okay. Example, buying a house. So consider someone who is buying a house. Most member of public, lack of technical expertise to assess the structural condition of the house, and therefore the risk that someone pay a large sum of money to purchase the structural unsafe property, which need to be further expenditure to make it's usable. So we need to reduce this risk. It is normally the house buyer, the user to pay the property surveyor, practitioner, so to perform a structural assessment to the house, to the subject matter. The surveyor would then report back, written report to the house buyer, identify any structural deficiencies and measured against the suitable structural criteria. So that's and with this information, the potential buyer can then make their decision to buy or not buy with the confidence that knowing what structural condition of the house is. So that's we need to be look around. So the development of the assurance engagement, incorporation, and separation of ownership. That's why it's very important in at the moment, especially during Theresa May government, is a lot of emphasis because many companies, corporate governance is the biggest issue. The like Barclay Bank CEO being paid £2 million bonus when Barclay Bank not earned a single penny profit back in 2015-16. So we need to be look around these issues. There are plenty of issues these carry on happening, and assurance is to provide the true and fair, and is it within line with the rules, huh? Okay, incorporation as the following implication. We need to creation of the legal between the owner of the business and the business itself, and we have opportunity for the owner and investor themselves, operation of the business basically is a separate legal entity. Business has its own separate legal entity. They have to treat all other. Organization is an artificial person. They have to treat other person. That's the key which we need to be look around. Any question, please? Both, if you have question, we all okay?
I'm okay, I'm following, all good.
Thank you.
Mhm.
Okay, so provide financial protection for stakeholders. It does not lead a significant conflict. So we need to look around. The shareholders seek to maximize their wealth. End of the day, they are the owner of the business. So we need to look around. The director and the management seek to maximize their wealth through the salary. Stewardship, the concept we are looking the stewardship. So which is the director to account for their stewardship of the company, because they are look after the company. These are sent to the owner and the shareholders for their assessment of the performance. They should work in the best interest of, so they care about their businesses, because at the end of the day they're getting salary, their salary being paid, and they have to look around in the legal parameter the business increase its goodwill. This present, another conflict. The director are responsible for preparing the financial statement, and the benefit from reporting higher profit is therefore need to be an independent review of the financial statement. Is therefore we need to be look around where the assurance in the particular audit is coming. So what is the audit? The word audit is derived from the Latin word adata, which means checking the accuracy in the book of account. Whatever we are saying, how accurate. That's the key, which we need to look around. Okay. So when we're looking, the stewardship is responsible to take good care of resources. A steward is a person entrusted with the management of another personal, or the personnel which we can look around the properties, personal property. For example, when one person is paid to look after another person's house while the owner goes abroad on holidays. So a relationship where the person had the duty of care towards someone else, is known as, we can normally use the word fiduciary relationship, which they have, created by. So the steward is accountable for the way the carries out the, so we normally use the word in responsibility accounting, because you've been given the budget, you've been given the resources, you have to work in, and you have to give the performance accordingly. Is a relationship that's good faith, such as between the director of the company and the shareholder. So the relationship between them is called fiduciary relationship, which we need to be work in the best interest of the shareholder. There is no separation of ownership and control in the sense of, so shareholders own the company while the director take the decision in the best interest of the shareholder, not the self or the personal interest. But in real world is happening, that's the ethics come from as well. Okay, accountability mean the people of the position of the power can be held account for their actions. So accountability or responsibility accounting, so they not abuse their position. Of course, they can be accountable for those. Accountability is the central concept of the good corporate governance. So corporate governance CG, just we need to look around. Agencies occur when one party is a principal, employee, another party is agent, as we discussed earlier. Okay. Audit engagement. We need to be look around in external audit in the most developed countries, uh, which is public limited or public quoted company, PLCs, the large corporation like Unilever, Procter and Gamble, Next, Marks and Spencer. These are all the companies. They have external editors and sometimes unfortunate, like in case of Enron, sometimes even external editor because the fees is paid by the client and they work more in the best in the interest of the client, not interest of the public. So objective of external editors engagement to enable the editor to express an opinion on whether the financial statement give true and fair, is prepared accordingly, and the financial reporting framework being applied, and we look which accounting standard and audit standard being applied accordingly. That's we need to be look around ethical principles, which is given by International Federation of Accountant, which is IFAC, and these are the code of ethics. So we look the 5 professional code of ethics, which we'll go through in the following lesson, such as, to remember easily, we can say popular people chat in office. So we can say PPCIO. To remember popular, P is a popular, P is a people, C is a chat, I in, and O is office. So we can say first is a professional behavior. To remember easily, we can say popular people are the famous people chatting in offices. Huh? So professional behaviors first. Second is professional competencies and due care. Professional competencies and due care, which is mean up to date knowledge. We have to do CPD. It's a compulsory for every accountant. I have to do 35 hours in a year CPD, which is mean continuous professional development. Like we have a every year's finance sect carry on training, and we need to be accordingly aware of, because such as the national minimum wage, basic interest rate, the tax brackets, and the various other legislation. So we should be aware of, depends upon the nature of the job which you are doing. So third is confidentiality. Yes, we have to keep the information confidential. Then shall we not pass to the third party without the consent of the client. So we have a GDPR as well. If we break the ethic, and we can break the law. Okay, next we have a I is called integrity. We need to be honest, of course, accountant always honest, yeah. So, but we need to be make sure honesty, best interest of, provide the true and fair information as much we not work our own interest, back end commissions and thing. We not charge the contingency fees, like I'll save you £100,000 worth of tax, you will give me 30% of that money in my fees. So that is illegal. We should charge hourly, we should charge whatever the fees we would, but we not contextualize our contingent condition attached with the saving of the tax, which is illegal to do so. Integrity and then objectivity. Objectivity is true and fair information. Always work your objective to provide the client professional advice, true and fair. But if is personal interest, self-review, self-interest, those can be compromised, these professional code of ethics. And we have to always, in accounts, we look around the safeguard. So audit is one of the safeguard. Okay, so audit engagement, as we said earlier, we need to be look around these points. So the types of assurance engagement according to International Audit Standard Board, International Accounting Standard Board, International Framework of Assurance Engagement permit 2 types of assurance: reasonable and limited. Reasonable insurance engagement is assurance engagement that the practitioner and gather sufficient appropriate evidence. So if you're saying you have a stock of 20 million in your warehouse, so what auditors can do, auditors can go actually in the warehouse and can observe it, then auditors can ask, give us invoice how you bought that stock and where the stock came from, and then they can look around the supplier how the payment been made. If the payment not been made, then what about the liability was created or not. So that's we can collect it sufficient evidence, and the auditor have a power to write to the bank and collect all the evidence in terms of all the transactions, and conclude the subject matter conforms all the material respect with identify suitable criteria. Of course, we can look around different criteria, we can different sampling size, and you can use the professional judgment as well. The positive worded assurance opinion. Okay, the role of auditor, the three parties we already said: management, director, shareholders, and the practitioner. And always we need to be look around the true and fair. That's is key. And auditor need to, because auditor role is huge, but is money oriented, is a lot of the emphasis on these days. So secretary audit, which is required by law and is must need to be submitted, and we need to be look around, not possible to provide absolute assurance in a big company, or you have audited a few maybe few days, few weeks, depend. And we need to be look around, it's very difficult to collect every absolute every 100% insurance. We relies on this look around the system, we do the test, and we run the process. We can say, create one a purchase order, or who is the creator of the purchase order, who is the paying off. Yes, how you make sure we are buying from. So we can find the process is right or not, and we can highlight it as being everything is the true and fair, and we can use the judgments. Sometime inherently and control used to be audit evidence, and representation from the management ways have relied upon and only the source of evidence. We need to be look around evidence is persuasive, not conclusive, and don't have review 100% because it's a difficult 100% every transaction you review. Okay, sometimes there can be a gap, so we have to look around how many percent misconception are there is a there's not evidence. So you have to look around, is there 5%, 10%, depends as a detail sufficient appropriate evidence you can, or you can use it in a big company, few things. Is it, what is the materiality? So we carry on using the word materiality. If there is a 20 million pound worth of 10 million pound, depends on the how much turnover of the company. If that's a big transaction is missing or you can't trust it, so that's you can give your opinion about your assurance. Yeah, because that's the biggest materiality effect, significant effect. If somebody is missed 10 pound, 20 pound, and million pound worth of millions pound worth of the company, but if we'll carry on missing 10, 10, 10, it can be become significant. Negative worded upon opinion, that's negative assurance. Sometimes details give right. Okay, so review engagement, voluntary analytical procedures, make inquiries, and negative assurance. Sometime it can be. Then of course, we have to look around. Objective of the review of the financial statement, enable a detail to state, whether the basis of the procedure which don't provide all the evidence required by the audit. Anything has to come to a detail's attention that cause the auditors to believe that the financial statement are not prepared in accordance with the applicable financial reporting framework, negative or limited assurance auditor can give. So it's based on our where we have a little deficiencies maybe, and they can give the uh, opinion about. So the company need to be according to best our review, which came our notice. Okay, so characteristic of review engagement, which will carried out using unlimited procedures, secretary audit, which we carry on collecting some evidence. Okay, so assurance engagement, reasonable assurance, secretary audit, free from material misstatement, true and fair. We can look around parties, and then limited assurance review, so which we can further enhance our audit expectation gaps? Sometimes it can be. So financial information, inherent limitation, representation of management evidence, and don't review 100%. So there can be a little gap. So we have to look around and draw that. Okay, so professional standard in the UK financial reporting standard FRC is responsible for issuing auditing standard. You have to look around these standards. We have a standard on the quality control. We have a standard on auditing, ISA standard. We have ethical standard. We have practice note, bullet point. These, a detail need to be look around these. And we have an international audit assurance standard board or set international standard on auditing, ISA. So we'll look, some standards in the following when we look the evidence like payrolls and various others, uh, elements which we can look around in term of the audit. So we have a federation of accountants, those, carry on giving us ethical standard and morals, high quality standards. Okay, duty of care. Of course, the professional standard, there is exist duty of care about enforceable at law. We have a negligence if it's the duty of care not being practiced, and negligence of can be, and that leads to the firm damages. And it's term of like, in case of Enron and World Telecom, and it's been especially in recently Carillion Construction Company, audit failure damage the payout, bad publicity, bankruptcy, disciplinary action, business can lose, bad publicity, and it can be charged as well. Yes, so limited liabilities agreement, which we can, LLPs, limited liability, like, partnership, professional indemnity insurance, we can look around these, all, some restriction can be in place. Professional standards, as we mentioned earlier, which is more focused on improving more. And there are the case laws as well. A lot of case laws can be referred. Professional, we can look around. Skepticism is an attitude of critical assessment. Use the questioning mind and necessity to prevent, overlooking. Suspicious. So a detail is always very suspicious about the carry on. They are observing and they want to find a detail should neither assume that the management is dishonest nor fail to question whether they are honest. They have to look around. This means the attitude to include being alert to the condition which indicate the possible misstatement due to the error or fraud. That's two things can be. It's did intentionally or did errors is due to some reason. Maybe they don't have a training system in place. That can be errors, can be, and the people they hire, maybe that's recruitment selection process not appropriate. So ethics standard independency. Yes, we need to look around independent. Yes, we have various code of ethics, ATHE, ACCA, and various. Earlier we said 5 professional code of ethics. Popular people chat in offices. We need to. And that's the crucial. Audit firm should not accept appointment if there are the significant barriers to independencies, like close family relationship. We shouldn't do audit. If you work accountant in the past in the same company and know you in the audit firm, you have to declare you shouldn't do audit for that company. You can go somewhere else because maybe you have a couple of old friends, they can be. Okay, so we have to these professional code of ethics. It can be compromised. What we need to look around the thread to apply. These are self-review. If you're checking your own work, maybe you was accountant, you're checking your own work and now you're doing audit, you shouldn't do it because this leads to compromise your familiarities. If you know someone very close, you're familiar with, that can create. So after a certain period of time, after the certain period of time, people in audit, they can carry on rotating. Intimidation, sometime, your significant fees is coming from one client. They say, if you don't work according to our interest, we can cancel the audit contract and we can go somewhere else and we can hire other audit firm. But hiring other audit firm, that raise the question as well to the investors. Self-interest, of course, self-advocacy. Advocacy, the word we use. If you have a two client and they are competing, either that they are merging and both want advice from you, then that can be objective to you not giving. If you give one information to one and others, then it's mean you have to draw the safeguard. Maybe the same person not give the advice to other people can give the advice, or you have a policy, you can't really tell them that other client, it's our client as well, because you're breaking the confidentiality as well. So it's sometimes is very tricky situations can be. So we have to look around how we can draw the safeguard different personnel when providing non-assurance services to the audit, monitors and managing the resilience, and we can look around on the revenue from the single client. These, all like we earlier quoted examples. So, okay. Uh, Ethics standard, confidentiality, authorized disclosure required by law. Okay, disclosure required by law is everything in the best interest of the society, the public, and the stakeholder. That's, then we can. Otherwise, we're not supposed to disclose without the permission of the client. Okay, assurance, assure someone can mean be comfort, convince, and encourage to persuade, and it can also mean affirm, attest, or the confirm. So a details can give assurance mean it can rely the trust that these accounts are audited. Then if you want to borrow the money, you can, of course, those are audited account, have the more reliability, then more authenticity and more validity of. So we have to look around the scope and regulation of audit and assurance, internal audit, audit planning, internal system of control in our organization, audit evidence. So those we can look around. Okay, audit evidence is ISA, International Standard of Audit Assurance, which is 330, which is we can look around audit responsive to assess the risk, which will go through various type of the risk. Any audit, whatever we do, we involve the risk. Material misstatement risk can be, which is material can be hide or overstated, or the creative accounting being used, offer a reasonable assurance that the financial statement free from the material misstatement. Sufficient appropriate evidence in the form of audit opinion, which we can draw. Computer, yes, techniques, which is we can use the softwares and things that also help, and the IT system for the control purposes, how sufficient, how secure that. So we have to look around audit risk, AR, the internal audit for. So response to the risk, which is what we have our responses, further audit procedures, audit plan, test of control, and substantial procedure, analytical procedure, test of details. So a details must obtain sufficient appropriate audit evidence, and then draw the effect of the reliability of the evidence, where this came from, who's saying it, yes, or the third party. And third party, they are very close business partners. The test of control is designed to system capable to prevent and detect the misstatement and operation of the systems. That's me. Okay. Any question, please?
No.
Okay. This will come in the following lessons as well. So substantial procedures we can look around in audit, and about the classes of the transactions we can always we need to look around, uh whenever you do audit are involved, you look around the segregation of duties, who is responsible for what. You look around the complete, where the transactions start and finish. So we can look around the different, abbreviations will carry on using analytical procedure, inquiry, external confirmation, inspection, observation, recalculation, and reperformance. That's, which we can look, and then we can draw our conclusion, our opinion. Analytical procedures is the relationship between the item of the data, relevant information. Analytical procedures, we can similar information for prior period in, we can look at anticipated result of the budget, industries information you have. So that's why sometimes it's difficult, because if you don't know the business of the industry and you going audit, you can look around generic, but you don't have an industry, because what are the industries benchmark, how industry work, who is the regulator of industry. So sometimes it's difficult to do audit itself. So we can look around reliable, relevant, and available. Okay, reporting to the risk. that's, editors always highlight what sort of the risk can be, which will go through audit risk, like inherent risk, control risk, deduction risk, those sort of risks, which we'll look around. And we look, the various audit of like payroll, like uh, computer and various other things, that's how we can minimize the risk. Okay, sampling, which we'll carry on using, uh, that's, uh, is picking the right sample from the population. So census is mean count everything, and the sampling is mean, from the population, you pick, from the whole transaction. We have to look around what is the maximum around misstatement of the population editors can accept. So then they can draw the reasonable or absolute opinion. And the selection randomly, systematically. This is a couple of you maybe learn in statistic, the sampling techniques, like, random sampling, quota sampling, convenience sampling. Yes, so editors can use to draw their opinions, draw and give the assurance. Qualitative aspect and quantitative aspect, they can look around, because end of the day, always identifying the risk for business, and we can look around. So CAT, which using the computer assisted audit technique, like audit software, test data from big £1 million transaction. So the system can highlight and pick, where the transaction is, it linked, who audit, what, when those things will audit there in numbers, being picked the sequence. Okay, further, we included some links for you if you want to. We'll carry on using, is called, if you want to find anything relevant to accounts or management. So in the Google search, let's say assurance, audit. And next to that, if you write the word Kaplan is a publisher, and they have a knowledge bank. The chapter of the books we call knowledge bank is quite good. You can find it. Okay, so today lesson was about audit and assurance, and we look around, what type of positive and absolute assurance and negative assurance, and how the editors can give the assurance. Yes, so that's all was, and is here you will see the link for the chapter.
All right, thank you.
Thank you. Thanks for attending today. Please, if you have any question before we finish.
Not today, maybe later in some other ones, but for now,
Okay,
everything's fine. Thank you.
thank you. Thanks for attending. What I'll do, I'll share with you the book, and you can read the chapter of assurance.
Great. Great. Thank you.
Yeah, and next lesson we'll go through LO2, learning outcome 2. And thank you. Have a
Thank you.
lovely day, and speak you next week then. And I'll drop you email. Thank you. Bye-bye.
Bye-bye.
Bye.